Hello and welcome everyone to the first ever episode of the Simple Eric series. Hope everyone had a safe and relaxing holiday weekend with their family and loved ones. For my personal friends and any new, curious viewers watching, this channel will be focused on my personal journey, learning about personal finance, portfolio management, and wealth growth via stocks, bonds, and cryptocurrency. As viewers, you'll have a first-class seat viewing how my portfolio and investment theses play out, for better or for worse. And I have no way of predicting the future. I'm not a financial expert. And for the sake of transparency, you'll be able to see how my asset picks perform with all their gains and losses. And of course, I welcome all feedback along the way and would love to build a community helping each other learn throughout this entire investing journey. I would love to have some thoughtful conversations with the rest of you on what I should consider in regards to my portfolio and maybe even what to improve on in the future. So thank you all so much for visiting, and let's get started. So this portfolio will largely revolve around a large cap growth investing strategy. Generally speaking, large cap refers to companies of 10 billion plus market capitalization value, and most of these are included in popular indices like the S&P 500, Dow Jones, and Nasdaq. I specifically chose this strategy because large cap companies tend to have stable revenue and earnings information, all of which are easily accessible to the public. Now, many established large cap companies also pay a dividend, which occurs when companies distribute a portion of their profits to shareholders, allowing investors to earn passive income without selling their shares or ownership of that company. While mid and small cap companies may offer more growth opportunities in some years, this portfolio is more focused on a simplistic, long-term investing strategy in large, well-known companies that many of us in the United States might often use on a regular basis. I'm also looking at companies that are growing their net profit, balance sheet, and dividends to hopefully design a well-rounded portfolio that provides a reliable source of passive income and capital appreciation across many years. In fact, I actually hold 40 positions across all my retirement and taxable brokerage accounts. These assets are spread across passive index funds, active ETFs, individual stocks across a multitude of sectors, and cryptocurrency. Granted, as a younger investor, my retirement accounts are all held in index funds like VTI, VOO, and VXUS, as well as sector-specific ETFs like VGT. However, my taxable brokerage accounts, like my Robinhood portfolio, include all 40 assets, and you'll have a front row seat to see how these assets perform over time and whether my portfolio grows at a comfortable rate over the next few years. Now, 40 positions sound like a lot of assets to keep track of, and that is very true if I was purely a growth investor or a short-term trader. However, because this strategy is focused on well-established, stable, large-cap companies, I don't have to frequently check up on my investments because I know that there's a high probability that they're not going bankrupt anytime soon. For example, I hold companies like Apple, Walmart, and JP Morgan. And if all of them went bankrupt, well, the US economy would probably be in free fall at that point, and nothing would really matter. I don't need to spend time every single day checking up on these assets because these are large, stable companies. I can just invest consistently and regularly to build large positions in the companies that I like the most. Now, I also hold index funds like VOO, which tracks the S&P 500 or the largest 500 US companies by market capitalization. I also own VTI, an ETF which tracks the total US stock market and gives me broad exposure to small and mid-cap stocks. Both ETFs are assets I can buy and hold if I'm confident that the US economy will improve over the next few decades. And historically, they have, with the S&P 500 returning an average annualized return of 9.8% over the last 90 years, or around 7 to 8% growth corrected for inflation. Holding broad market ETFs like these and international funds like VXUS helps smooth out my investing journey should any of my individual stock picks do abnormally poorly over the next few years. I should also explain why I think that this specific strategy works well for my personal situation. I'm 21 years old and a college senior beginning his journey learning about industry jobs and personal finance. I'm also a pre-med student hoping to become a physician someday, who's also really interested in learning about investing and building a successful portfolio. I feel like talking about my personal situation is actually really important when discussing investing strategies because every one of us has a unique story with specific hopes and dreams. There's not a one-size-fits-all investing strategy, but instead, the one that we choose should reflect our own individual situation and aspirations. For example, I currently have a limited income, and so saving as much as I can is extremely important to my future well-being and potential medical school costs. After I built up a checking and savings account for potential emergency uses, and after paying for all of my necessities, I'm putting the money I save into productive assets like the 40 I mentioned prior. And if I choose to retire at age 67 through Social Security and all goes well, I'll have 45 years for my assets to grow into a large portfolio providing passive income for the rest of my life. And if I'm successful in achieving my dreams and developing financial literacy, I might get there a lot sooner too. At the start of 2021, I'll load up my Robinhood account with a deposit of $2,520 from the wages I earned working as a teacher's assistant last semester. I chose this number because there are around 252 trading days in the stock market each year. This actually gives me $10 to invest every single trading day. Now, Robinhood allows me to purchase fractional shares with as little as $1, allowing me to invest in up to 10 companies every single day. This means that if a company I really like long term happens to fall 1% for some short term bad news, I can actually see that as a small buying opportunity. It also allows me to dollar cost average and slowly build up large positions without the emotional stress of lump sum investing and worrying if the market tanks the next day or the next week. In fact, if the company goes on sale, I still have a lot of extra cash to buy a small amount each day. Now, $10 a day also works very well for me because I won't feel bad if I buy a fractional share at a slightly higher price. This actually gives me a strong emotional barrier against frequent trading and irrationally selling my stocks in an attempt to time the market. If the market falls, I can simply buy more shares at a lower price at any time with cash on the sidelines. And most importantly, I'm constantly investing in my portfolio in companies that I personally really believe in, and this helps me build strong, long-term investing habits to optimize my risk and return in my portfolios in the future. I also get 0.2% savings on my uninvested cash in Robinhood, which, while low, is still better than nothing. And surprisingly, investing as little as $10 a trading day might actually have enormous benefits to my financial well-being decades in the future. Investing just $10 a trading day amounts to a monthly contribution of $210. Now, if I invest that amount for the next 45 years at an average market return of 8% adjusted for inflation, I might have nearly $1 million portfolio by the time I retire at age 67. And if I can beat the market by an average of 2% each year, that could be as much as $1.8 million. And even if I trail the market by 2%, that's still over $500,000 with the relatively small investment each day. And this is precisely why I enjoy this specific investing strategy in large cap growth stocks. I can invest a small amount each day where it's small enough that I'm not hindered by any emotional feelings to time the market. However, it's also large enough to help me build a successful long-term portfolio that makes my hard-earned, saved money gain extra passive income for me through my investments. Furthermore, as my income grows, as I develop my skill sets in my profession, I can put more money into the market and potentially be financially stable at a much faster rate. And being financially stable allows me more time to spend doing the things that I love, whether it be spending time with family, engaging in side hobbies with friends, or even mentoring younger individuals in my profession and empowering my local community. All of this is really worth it to me, and I hope that this series can document my personal journey learning about finance and investing. And if any of these videos help inspire even just one person to start their personal journey towards financial stability, that makes me incredibly happy. And if I can make a positive impact on someone's life and well-being decades in the future, that's very worth it for me too. Now, I'll be going over all the 40 positions I hold more in depth over the next few videos, so please be on the lookout for them by subscribing if you're interested. As of Christmas 2020, my Robinhood portfolio is around $4,000 with an all-time performance of 8.88% in the last few months. Now, one important thing to mention about Robinhood performances is that it measures total portfolio growth, not a money-weighted return. So every time you deposit more money into this brokerage account, your performance or percent growth decreases proportionally relative to your total portfolio size. I wish it kind of calculated money-weighted returns like M1 Finance, but that's just being hopeful. So for full transparency, my M1 Finance account, which has a similar allocation as my Robinhood portfolio, has a money-weighted return of 16.34% within a similar time frame. I'm happy to say that I'm actually outperforming the S&P 500 over the past few months, but as we all know, short-term gains don't really mean much. Over the next few episodes, I'll be going in depth in the bull theses I have in the companies I currently invest in. Now, this video is getting a little bit long, so I'll only briefly mention them here and expand on them over the next few episodes. So far, the 40 assets I own are Apple with ticker symbol AAPL, Advanced Micro Devices with ticker symbol AMD, the Vanguard S&P 500 ETF, ticker symbol VOO, the Vanguard Total Stock Market ETF, ticker symbol VTI, O Realty Income with ticker symbol O, the Chinese Alibaba, ticker symbol BABA, Tesla, ticker symbol TSLA, Amazon, ticker symbol AMZN, Tencent with ticker symbol TCEHY, Thermo Fisher Scientific, ticker symbol TMO, the all-loving Microsoft, ticker symbol MSFT, JP Morgan Chase with ticker symbol JPM, Healthcare AbbVie with ticker symbol ABBV, Walmart, ticker symbol WMT, MasterCard, ticker symbol MA, Store Capital with ticker symbol STOR, Home Depot, ticker symbol HD, the all-loving Disney as well with ticker symbol DIS, ARK Innovation ETF, ARKK, Facebook with ticker symbol FB, Alphabet with ticker symbol GOOG for Google, Johnson & Johnson with ticker symbol J&J, Target with ticker symbol TGT, Visa with ticker symbol V, PayPal with ticker symbol PYPL, Taiwan Semiconductor Manufacturing with ticker symbol TSM, Nvidia with ticker symbol NVDA, the up-and-coming Shopify with ticker symbol SHOP, and then Costco with ticker symbol COST, Beyond Meat with ticker symbol BYND, the Vanguard Total International Stock Market ETF with ticker symbol VXUS, Berkshire Hathaway with ticker symbol BRKB, McDonald's with ticker symbol MCD, the Vanguard Information Technology ETF with ticker symbol VGT, Bank of America with ticker symbol BAC, Dropbox with ticker symbol DBX, T-Mobile, ticker symbol TMUS, and T. Rowe Price with ticker symbol TROW. I also own two cryptocurrencies, one of them being Bitcoin, which is extremely popular, and the up-and-coming Ethereum with ticker symbol ETHUSD. Whew, that was a lot. But already you can see that the majority of these investments are in large companies and assets that many of us might regularly use. I love investing in companies that I personally know or use on a regular basis. For instance, if I'm a happy, loyal customer of, say, Costco, with their low gasoline costs and cheap prices for quality groceries and clothing, chances are that there are millions of other customers who love Costco as well. So if I and everyone still uses and enjoys shopping at Costco, I'm not going to be deterred if the stock price temporarily falls. In fact, I might actually be happy to purchase more shares of a quality company that I believe in, like Costco. And remember, investing in stocks is much more than just following a ticker symbol and dollars on a screen. Instead, you are purchasing a small part ownership of that company. So for many beginners like me, famous investors like Warren Buffett and Charlie Munger often say to start off investing in companies that you already know. If I'm a happy customer of a specific company, I'm more likely to know exactly why their products appeal to customers. If I shop at a specific place, I might have first-hand knowledge of whether this company is growing or not in my local area. While these are certainly anecdotal statements, they generally help provide additional information into the investments I make and help me speculate on potential long-term growth. For example, I really like Apple, and even if the stock price falls, I'll be happy to hold on to my position because I personally view it as a very successful company with more growth in the future. And this strategy of investing in stable, large cap growth stocks therefore helps me invest in companies that I know and am a happy customer of, allowing me to weather any market corrections and continually invest in my bullish positions. Now, with all that being said, thank you everyone so much for watching episode 1. If you enjoyed this series, feel free to leave a like and subscribe. If you're interested in starting your investing journey with some free stocks with me, feel free to use the referrals down below in the description. As always, be safe, be healthy, and I'll see you next time.